Very good day to everyone. So the ICAI has now conducted the mock test paper series 1 for September 2024 examination taxation CA Intermediate course group 1. Okay, so in this video we are going to discuss the working or the logic or the reasoning for the various MCQs, case scenarios and MCQs. And the reason is that the ICAI merely gives the final answer to these MCQs. So many a times you are not clear as to what is the reason as to why an answer is correct or why an answer is not correct. So in this video we will discuss all of those things, and the descriptive questions, there is no need to make a video for those because the ICAI in the answer document provides the full working. So even in respect of descriptive questions, if you go through the ICAI document, if you have any question or doubt, you can simply ask me by writing in the comments box. But in this video, we are going to restrict ourselves to the reasoning and the logic behind the correct answers for these MCQs. So we will first cover the income tax law, and then we will move to GST. Okay. So I'm not going to read out the questions because you have already gone through the questions and you have attempted the mock test paper, and therefore we will simply go through the questions and we will understand the logic and the reasoning. So first question is, the amount of tax to be deducted by Hamara Paisa Bank on cash withdrawals by Mr. Rudh is what? And the correct answer given is 10,000. So Hamara Paisa Bank, if you look at the question, for the wedding, so there is his minor's daughter's marriage, and for the wedding he withdrew 40 lakh cash in the month of September 23 and 65 lakh cash in the month of October 23 from Hamara Paisa Bank. So an aggregate of 1 lakh 5,000 cash has been withdrawn. And when we talk about TDS provisions, section 194N will be the relevant TDS section. And if you look at the question, it is given that he regularly files his return of income. Okay, so that means Mr. Rudra is not a RY defaulter. Okay, so what is the rate under 194N? For any sum in cash from one or more accounts maintained by the payee with the payer, so TDS is to be deducted on the sum or the aggregate of sums. The aggregate is 1 crore 5 lakh, right? Yes, it's 1 crore 5 lakh. So ROI defaulter case is not applicable. For others, TDS is to be deducted at 2% on the sum exceeding rupees 1 crore. So 2% of 5 lakh, basically 2% of 5 lakh means it's 10,000. So this is the correct answer. So we move to the second question. The amount of tax to be deducted by Mr. Rudra on payment made to Tasty Caterers is what? And the correct answer is nil. And we will understand why this answer is the correct answer. So Tasty Caterers. So for this wedding, he took the catering services of Tasty Caterers, a sole proprietor for the wedding, for which he paid 10,20,000 on 15th October 2023. Right? So catering services has been availed by Mr. Rudra, and Mr. Rudra is an individual, and the Tasty Caterers is a sole proprietor. So sole proprietor is also an individual. So if we look at the TDS provisions, what we need to first check is section 194C, contract for work. And if you look at the scope of work, catering is one of the items. So catering is work, and TDS is to be deducted under 194C if the payer is a specified person and the payee is a resident contractor. So payee, in our case Tasty Caterers, is a resident contractor, and payer should be a specified person. So is Mr. Rudra a specified person? So for being a specified person, in the previous financial year, the business turnover should exceed 1 crore. And it is given his turnover for the previous year 22-23 was rupees 6 crore. So this condition is satisfied. So Mr. Rudra becomes a specified person under 194C. Now the question is whether Mr. Rudra needs to deduct TDS under 194C. Now what we need to note here is there is one case where TDS is not deductible, and that is number 2 here. In the case of an individual payer, where the sum is credited or paid exclusively for personal purposes of such individual, then TDS is not deductible, and here it is a case of wedding. That means personal purpose, so 194C will not apply. 194C will not apply. Now this is not the end of the story. If 194C is not applying, we need to check one more section, which is section 194M, where the payer is an individual, Mr. Rudra, who is not required to deduct TDS under section 194C. Okay, so 194M needs to be checked here because 194C TDS is not deductible under 194C. And this is any sum for carrying out any work, and work we saw catering services is covered within the scope of work. But TDS is not deductible where the sum or the aggregate is not more than 50 lakh. So in our case, the sum is not more than 50 lakh, and therefore 194M is also not applicable. So consequently, neither 194C nor 194M is applicable, and therefore the amount of tax to be deducted by Mr. Rudra on payment to made to tasty caterers will be nil. Okay. Question 3. What shall be the amount taxable and in whose hands with respect to purchase of immovable property by Mr. Rudra from SK Builders and gift of the same to his daughter? So what is the question here? And the question you see, for her wedding, Mr. Rudra gifted his daughter a house property purchased from SK Builders on 10th October 23 by account pay check for 15 lakh. The stamp duty value of the property on 10th of October, okay, that means on the same date, is 16 lakh, and on the date of transfer to minor daughter is 20 lakh. Now, purchase of immovable property by Mr. Rudra. So we need to check the provisions of 56(2)(x) under the head IFOS, whether Mr. Rudra will be taxable on any amount in his hands. So if we look at 56(2)(x), these are the provisions. Okay, this is the chart, and for any immovable property, which is the case in our hand, received for consideration. Okay, received for consideration. Now, twin conditions need to be satisfied for 56(2)(x) to become applicable. The excess should be more than 50,000. What is excess? SDV minus consideration. Okay, so the excess should be more than 50,000 and SDV should be more than 110% of consideration. If both these conditions are satisfied, then the excess is taxable, else nothing is taxable under 56(2)(x). So excess is more than 50,000 and SDV is more than 110% of consideration. Now if we look at our question, the consideration is 15 lakh and the stamp duty value is 16 lakh. So excess is 16 lakh minus 15 lakh, that means 1 lakh. So 1 lakh is more than 50,000. So first condition is met. Okay. Second condition is that the SDV should be more than 110% of 15 lakh, which is not the case. It is not more than 110% of 15 lakhs. So therefore nothing will be taxable in the hands of Mr. Rudra when he is purchasing the property from SK Builders. Now, what happens then is, after purchasing, he gifted his daughter the house property. Okay, and the stamp duty value of the property on the date of transfer to the minor daughter is 20 lakh. So when he is gifting the property to his minor daughter, capital gains will not arise in the hands of Mr. Rudra. Why? Because section 49(1) will apply, and since it is a case of gift, okay, and therefore capital gains will not arise in the hands of Mr. Rudra. Capital gain will arise subsequently when his minor daughter subsequently sells the house property. Then in that case capital gains will arrive. Is there any tax element or taxation happening in the hands of his minor daughter when she is receiving the property from Mr. Rudra? So again 56(2)(x) will not apply in the hands of minor daughter. Why? Because Mr. Rudra is a relative of the minor daughter, and 56(2)(x) is not applicable when the property is received from any relative. And if you look at the meaning of relative, it includes a parent. Okay, so in nutshell, if we see, when Mr. Rudra is purchasing the property, he will not be taxable under 56(2)(x). When he is gifting the property, he will not be taxable in respect of capital gains. And when the minor daughter is receiving the property, she will not be taxable under 56(2)(x). So as a result, correct answer will be V. Nothing is taxable in the hands of Mr. Rudra and minor daughter. Okay. Now we move to the next question, which is number 2. And what is the first question? The first question is, what is the amount of interest allowable as deduction under section 24 to Mr. Mayank for AY 24-25? Section 24, while computing income under the head IHP, income from house property, and the correct answer is 25 lakh, and we will see why this is the correct answer. So interest payment, if we look at interest payment, Mr. Bank had bought a residential house in 2018 and he has let out the house on rent. So this is a let out property in Delhi, okay? And this property was funded through loan from PNB, and interest due for FY 23-24 to PNB is 25 lakh, out of which he paid only 20 lakh during the year. Now interest is payable for a let out property, and this is the case of purchase of house property, okay, and therefore interest will be deductible under section 24. And as we know, 2 points here: in the case of let out property, there is no limit as far as deduction of interest is concerned. And second point, interest is deductible on due basis, not on payment basis. So even if only 20 lakh of interest was paid, but 25 lakh is what is due, and therefore 25 lakh of deduction will be allowed, and to the full extent, because this is a let out property. Okay, so 25 lakh, this is one amount. Now there is another interest payment, as we can see here. Mr. Mayank then took a loan of 1.5 CR from SBI for construction of first floor in that house for self-occupation. So this is also interest on loan which has been taken for construction of property, and ideally this should also be deductible under section 24. Okay, but the question says that the construction is in progress as on 31st March 24. That means during the financial year, during the previous year 23-24, the construction has not been completed. Now we know that income from house property starts becoming taxable for a property only when the property comes into existence. Here the construction is not yet complete. The first floor has not yet come into existence, and therefore there is no question of deduction for interest during the current previous year. And therefore this particular interest amount paid to SBI, okay, of 8 lakh to SBI out of 10 lakh. So 10 lakh was due and 8 lakh has been paid, but this amount which is due of 10 lakh will not be deductible. So the answer should be 25 lakh. Okay, so this is the correct answer. Now we come to question number 2. What is the amount of deduction permissible to Mr. Mayank under chapter VIA of Income Tax Act for FY 24-25 if he has opted out of the default tax regime? That means opted out of section 115 BSE. So the optional tax regime or the normal tax regime will become applicable, and the chapter VIA, and the correct answer is 3,70,000, and we will see how this has come about. So if you look at the question, Mr. Mayank bought electric vehicle worth rupees 50 lakh on loan from BSM Bank, which was sanctioned on 1st April 22, and interest of 7 lakh was charged. Okay, so this is one point. Now if we note the provisions of 80EEB, the loan has been taken for purchase of electric vehicle, and the loan has been taken from a bank, and in our case the loan has been sanctioned during the period PY 1920 to 22-23, and all the conditions are being satisfied, and deduction will be of interest payable during the year, and the limit of deduction will be 1,50,000. So this will be what will be allowed under section 80 EEB, 1,50,000. Okay. Then the question states, Mr. Mayank has also taken loan from ABC Bank for his daughter's higher education, and he paid 50,000 as interest to ABC Bank. Now here section 80E will become applicable, where the deduction will be of any amount paid by the SSE in the previous year, and the deduction is allowed for 8 previous years from the previous year in which the SSE starts paying the interest on loans. So we are assuming that this condition is satisfied in this in our question, and the limit of deduction is no limit. So basically under section 80E, this 50,000, okay, will be allowed as a deduction. Now in the question it is also given he paid Mediclaim of 20,000 to New India Assurance Scheme for ensuring his health. So section 80D becomes applicable and the upper limit is 25,000. So the entire 20,000 will become deductible here. What else? What else is remaining? So if you look at this question, what about this particular portion? Is can anything be claimed as a deduction under chapter VIA? So here we are talking about payment of interest and payment of principal. So as we noted, there are two properties here. So during the previous year, he repaid principal amount of 25 lakh and 5 lakh to PNB and SBI respectively. He also paid interest to SBI and he also paid interest to PNB. Okay. So as far as interest deduction is concerned, extra deduction over and above section 24 can be allowed under section 80AA. Now if we look at the conditions of 80AA, individual has taken a loan for acquisition, that means construction of a floor, and loan has been taken from a bank. But if you look at the conditions, this condition is not satisfied because loan has not been sanctioned during the previous year 2019, 22, 21, 22, because the loan has been taken from SBI on 1st July 2023. Now is section 80C applicable in this case? Can deduction be claimed under section 80C? So if you look at 80C, one of the items is specified payment for the purposes of construction of a residential house property, income from which is taxable under the head IHP. Okay, income from which is taxable under the head IHP, and this includes the repayment of principal amount to a bank. So if we go here, what is the principal repayment? 25 lakh for the let out house property and 5 lakh for the under construction property. Okay, so as far as the under construction property is concerned, the income is not taxable yet under the head income from house property, so 80C will not apply to this principal repayment. But this 25 lakh principal repayment for the existing house property, 80C can be claimed, and the limit of 80C will be what? It will be 1,50,000. Okay, so what is the total amount of deduction that can be claimed? 1,50,000, 1,50,000, 3 lakh, 3 lakh 50, 3 lakh 70. So 3 lakh 70 becomes the answer. Okay, is this clear? Next, in whose hands would Sia's rental income from house property at Haryana be taxable, and how much income would be taxable? So Mr. Mayank owns another house in Haryana and he transferred that house to his minor daughter Miss Sia on her birthday as her birthday gift, and Miss Sia gave the house to the local panchayat from September 2023 at a rent of 5,000 per month. Mrs. Mayank's total income for AY 2024 is higher than that of Mr. Mayank. This is the first year when Miss Sia has any source of income. So Mr. Mayank owns a house which he transferred to his minor daughter. And if you look at the clubbing provisions under section 64(1)(a), the rental income can be clubbed in the hands of the parent whose income is higher, which is Mrs. Mayank. But this will not be the position in this question because 64(1)(a) will not apply in the first place. Clubbing provisions will not apply. Why clubbing provisions will not apply? Because instead, Mr. Mayank will be deemed to be the owner of the house property under section 27. Deemed owner section 27. If an individual transfers any house property to his or her minor child without adequate consideration, then such individual shall be the deemed owner, and therefore the house property will be taxable in the hands of deemed owner. So this means that under section 27, in our case, Mr. Mayank becomes the owner, and therefore income from house property will be taxable in his hands. Clubbing provisions will consequently not apply. Okay, and therefore what will be the income which will be taxable at a rent of 5,000 per month from September, October, November, December. and January, February, March, so 7 months. So 7 into 5 means 35,000. 35,000 minus a standard deduction of 30%, which will give you the amount of 24,500. So the correct answer will be what? In Mr. Mayank's hands, 24,500. Okay. Let's move to the next question. Question number 3. Mr. Arpan, aged 35 years, submits the following particulars. These are the particulars. And the question is that compute the total income for AY 24-25 and the amount of loss that can be carried forward to the subsequent AY and the normal provisions of the Act. That means we need not apply Section 115 BAC. Optional tax regime becomes applicable, normal provisions of the Act. Okay. And option A is the correct answer, and we will see how this has come to. So income from salary computed 4 lakhs. Since it is computed, there is no need to further give standard deduction. Now loss from let out house property and brought forward loss from let out house property for AY 23-24. Now loss from let out house property can be adjusted against salary income, but there is a limit of 2 lakh. So this becomes 4 lakh and minus 2 lakh. Okay, so balance comes to 2 lakh. Salary income balance is 2 lakh. Now this balance loss of house property, which is 20,000, and the brought forward loss, it cannot be adjusted under any other income, because the limit of 2 lakh is for adjustment, and what remains out of 2 lakh 20,000 is 20,000. So 20,000 needs to be carried forward, and as far as brought forward loss is concerned, it can be carried forward and adjusted against income from house property, which is absent in this question, and therefore this loss also needs to be carried forward. So 2 lakh 30 and 20,000, so 2 lakh 50,000 of loss from house property needs to be carried forward. 2 lakh 50,000 needs to be carried forward. Okay. Now what is left? Business loss is left. Now business loss can be set off against bank interest, which is income from other sources, but business loss cannot be set off against income from salary. Okay, this is the limitation. So business loss 1 lakh will be set off against 80,000, and what will remain as 20,000 business loss. Okay, and income from salary will become the total income, which is what? The balance was 2 lakh. So the correct answer will be this. Total income will be 2 lakh, which comprises salary income, and the loss from house property of 2 lakh 50 and business loss of 20,000 will be carried forward to the subsequent AY. Okay. So this is the reason for this correct answer. The last question is for income tax. Mr. Raja, aged 64 years, was not able to provide satisfactory explanation to the assessing officer for the investment of 7 lakh not recorded in the books. What shall be the tax payable by him on the value of such investments considered to be deemed income as per section 69? So tax has to be computed in view of section 69, because this is unexplained investment of 7 lakh. So 7 lakh will become the deemed income under section 69, and Mr. Raja is a senior citizen, and should the and here in the question nothing is given as far as whether taxes to be computed under optional tax regime or default tax regime, and if optional tax regime, then Mr. Raja becomes a senior citizen, and therefore the enhanced basic exemption limit of 3 lakh will apply. But all this will not be relevant. Why? Because we are talking about section 69, and when we talk about section 69, tax is to be computed at special rates, which is what? Which is section 115 BBE. Okay, as per which the rate of tax will be 60%, surcharge will be 25%, and HEC will be 4%. So 60%, 25%, 4%. Now if you look at 7 lakh, so 7 lakh basically is 7 lakh, and tax will become at the rate of 60%, 4 lakh 20,000. Okay, 4 lakh 20,000 will become tax, and 20% will be the surcharge, 1 lakh 5,000. So total becomes what? 5 lakh 25,000, and we add 4% HEC, and this becomes 5 lakh 46,000. So this will become the correct answer. We now move to GST, and case scenario based MCQs, and this is the case scenario pertaining to Himadri, and we straight away move to the MCQ. And the first one is supply of package made by Himadri to Natraj traders is a dash and is taxable under GST at dash, and the correct answer is mixed supply and 18%. So what are the facts? In April, she supplied 1000 packages to Natraj traders, each consisting of a pen holder, a pen and a pencil box at a single price of 150. Rates of GST for pen holder, pen and pencil box are 5%, 12% and 18% respectively. So if you look at the concept of a mixed supply, so there are basically two or more items. In our case, there are three items which are supplied, okay, and they are supplied in conjunction with each other by a taxable person for a single price of rupees 150, and such supply does not constitute a composite supply. Okay, in that case the supply will become a mixed supply and it will be taxable at the rate of the supply which attracts the highest rate of tax, which is 18% in our question. So does this supply constitute a composite supply? No. Why no? Because for answering this we need to see the definition of composite supply. So composite supply is a supply where two or more taxable supplies are naturally bundled. Okay, so the question is whether pen holder, pen and pencil box are naturally bundled. No, they are not naturally bundled. There are different items, and therefore the this case becomes a case of mixed supply, and therefore the rate of tax will be the highest rate, which is 18%. Okay, so the correct answer will be B. Next question. Out of payments received by Himadri in the month of May, value of exempt supply is what? And the correct answer is 70,000. We will look at the reasoning. So she received following payments during the month of May. The first is earned 1,60,000 by providing services as business facilitator to YYZ Bank with respect to accounts in its urban area branch. So business facilitator is providing services to a bank in a non-rural area. And if you look at the exemption provision, services with respect to accounts in branch other than rural area branch is not exempt. Basically, these gray highlighted sections are basically exempt, and these are not exempt. And out of these, basically the two that you see in black are chargeable on reverse charge basis. Okay, so here the account is in the urban area, so this is not exempt. So services provided by business facilitator to bank, so this is basically taxable, not exempt, and taxable on reverse charge basis. Okay, that means Himadri is not supposed to pay GST, the bank is supposed to pay GST on this. Next one is earned 50,000 by providing services by way of renting of residential dwelling for use as a boutique to Supriya, an unregistered person. So there is a renting of residential dwelling for use as a boutique, that means for non-residential purposes, and the renting is to an unregistered person. So if you look at the provisions under entry number 12 of the exemption notification, services by way of renting of residential dwelling for use as a residence, not for use as a boutique, is exempt. Okay, and therefore property rented out, though it is residential, but the purpose of renting is non-residential. So whether it is rented out to unregistered person or registered person, it doesn't matter, the exemption is not available. Okay, the third item is received 70,000 for supply of manpower for cleanliness of roads, public places, architect services, etc., not involving any supply of goods to whom? To a municipality. So not involving any supply of goods, that means it is a pure service and the service is provided to municipality, and whether exemption will be available, see entry 3. Following is exempt. Supply of the following to local authority by way of any activity in relation to any function entrusted to a panchayat or municipality, entry number 3, in the case of pure services. That means it is not a box contract service or it is not a composite supply involving supply of any goods. So it is a pure service case, and therefore entry 3 exemption will be applicable. So the answer will be 70,000 is basically exempt. 70,000. Next question. Compute the value of supply under section 15 of the CGST Act made by Hemadri in the month of June. And the correct answer is 45,000. Why? In the month of June, Hemadri made supply of taxable product A during June, details of which are as follows. Basic price of product A before TCS is 45,000. So 45,000 is supposed to be included in the value. Tax collected at source under IT Act 2500. Now TCS is not supposed to be included in the value, right, during valuation. So this will not be included. And then next it's subsidy. She received a subsidy of 55,000 from Habitat Foundation Private Limited, which is not the government. So this is not the case of receiving subsidy from the government. Subsidy from a non-government organization is supposed to be added to the value, provided it is directly linked to the price of the product. So let's see. For usage of green energy, and the subsidy was linked to the units of green energy and not the aforesaid product. So the subsidy is not directly linked to the price of the product, and therefore this subsidy also will not form part of the value. So what remains basically is 45,000. So 45,000 will become the value. So that's why option A is the correct answer. Okay, last one. Compute the amount of ITC that can be claimed by Hemadri in July, and the correct answer is 1,50,000. Why is this the correct answer? In July, Hemadri provides the following information regarding receipt of inward supplies during July. Purchased buses, seating capacity of 24 persons for transportation of her employees from their residence to office and back, and depreciation is claimed on the GST component. Now when we talk about ITC, this is the case of bus with 24 capacity, and ITC is blocked in what case? In the case of motor vehicle for transportation of persons having approved seating capacity of 13 or less persons including the driver. So the bus of 24 capacity is not basically covered here, and therefore ITC should not be blocked, but still it will be blocked because of the reason that depreciation under the Income Tax Act has been claimed on the GST component, and therefore ITC will not be available in the case of the bus. Okay. Next is purchase a truck having GST component of 1,50,000 for transportation of finished goods. No depreciation has been claimed on GST component under Income Tax Act. Now truck is obviously not covered here because it is for transportation of finished goods, not for transportation of persons, and also GST depreciation has not been claimed on GST component, so ITC will not be blocked. ITC will become applicable, okay, on 1,50,000. And the last one is availed outdoor catering services for a marketing event organized for her prospective customers. So ITC on catering services, if you look at, is because these services are in the nature of personal consumptions, and catering service finds place here, outdoor catering. So ITC is not available, ITC is basically blocked. So 1,50,000 becomes the amount on which ITC will be applicable. Next, in respect of services availed by Hemadri in April, which of the following is the correct statement? Option B is the correct one, but we will look at other options as well. Option A, godown construction service availed from her brother-in-law free of cost is considered as a deemed supply. And the facts are, in the month of April, she availed the services of construction of a godown for the business from her brother-in-law who was financially dependent on him. Now, is this a supply? So this is free of cost without consideration. However, under para 2 of schedule 1, a supply of services without consideration can still be treated as a supply if it is between related persons and made in the course or furtherance of business. So if you look at this question, we have a brother-in-law who is financially dependent. Related persons include members of the same family. Family means a spouse and children of the person, and parents, grandparents, brothers, if wholly or mainly dependent on the said person. But brother-in-law is not included in the term brother, and therefore brother-in-law is not a related party, and therefore para 2 of schedule 1 is not applicable. And since there is no consideration, this transaction will not be treated as a supply. Okay. So this goes out. B, professional service availed from her son free of cost is considered as a deemed supply. So this is the case of son, and professional services received without consideration. And the question says that she has also availed professional consultancy services in April from her business from her son, who is a well-settled chartered accountant in Telangana. Well-settled means not financially dependent. Not financially dependent. So going back to the concept of this para 2 of schedule 1, is the son who is not financially dependent a related person? So members of the same family, and family means children also, and children, whether they are financially dependent or not financially dependent, children are considered as a related person, and therefore para 2 of schedule 1 will apply, and therefore this transaction will be treated as a supply. And therefore what will be the answer? Answer will be answer B. So consequently option C and D will go off. They will not be the correct answers. Okay. Out of payments received by Himadri in the month of May, the value of supply on which tax payable by the recipient under reverse charge is what? And the answer is 1,60,000. So reverse charge. Payments received by Himadri in the month of May, and in the month of May, we saw some time back when we were talking about exemptions that this one earned 1,60,000 by providing services as business facilitator to the bank with respect to accounts in its urban area branch are not exempt. And as we saw in the chart which we saw on the screen, it was in the black box, and which meaning thereby that reverse charge was applicable. So 1,60,000 will be in this case it will be taxable on reverse charge basis. So 1,60,000 is taxable on RCM basis. 70,000, as we saw some time back, is exempt. And what about this 50,000? Is this? So we saw this is not exempt, but is this taxable on reverse charge basis? Renting of residential dwelling for use as a boutique to an unregistered person. So if we look at this table which we saw some time back, property rented out is residential and purpose of renting is non-residential. Whether the renting is to unregistered or registered person, exemption is not available. But if you look at this black box denotes that tax is payable under RCM. So, but this is a case where the renting out is to a registered person. Tax is payable on forward charge basis, that means not under RCM, where renting out is to an unregistered person. In our case, Supriya is unregistered person, so reverse charge is not applicable. So what remains for reverse charge mechanism is 1,60,000. So 1,60,000 should be the correct answer. So this is the correct answer. Okay. Next question. Suvidha Enterprises issued invoices pertaining to two independent outward supplies, wherein one invoice value of supply was this. So this is basically the question, and we are asked which of the following is correct in respect of document to be issued by the firm for understatement and overstatement of invoice value. So one invoice value of supply was understated by 75,000. So when there is understatement, debit note will need to be issued. Okay, debit note will need to be issued for 75,000. Debit note is to be issued for 75,000. The other invoice is overstated by 45,000, so it will need to be brought down. So credit note for 45,000 will need to be issued. Credit note for 45,000. So basically I and IV will be the correct answer. So I and IV, so basically option C will be the correct option. Ria and Company, a partnership firm, is engaged in retail trade since 1st April. But the firm became liable for registration on 1st of October, and however it applied for registration on 10th October and was granted certificate of registration on 5th of November, determined the effective date of registration of Ria and Company. The correct answer is 1st of October. Why? Because if you look at the registration provisions, where the application for registration has been submitted within 30 days from the date on which the person became liable for registration, registration is effected from the date on which the person becomes liable for registration. So here the application has been submitted on 10th, that means within 30 days from 1st of October, and therefore the registration will be effective from the date the firm became liable for registration, which is 1st of October. So this brings us to the end of our video, and subscribe to my channel so that you do not miss out on any of such important videos. like this video and share this with as many friends and colleagues as possible so that others also get the benefit of this video. If you have any questions, do write in the comment box. I will post my reply or a comment as soon as possible. All the best to you. Good luck. Thank you. See you very soon in my next video.